initial session में we covered the annual report, financial statement analysis, the financial ratio, the linkage of the financial statements, again very critical. So all these things will be utilized. All these concepts shall be utilized, and at the end we shall be utilizing the valuation metrics also. All those things that we try to understand: P multiple, PB multiple, EV to EBITDA, all these kind of things. If you recall in the previous session, we tried to understand the difference between the free cash flows to firm and the free cash flows to equity, FCFF and FCFE. Again, that's a very critical input in financial modeling valuation. I'll come to that again. Because anyways, you are forecasting the company's cash flows, right? In financial modeling, the one thing that you need to know is like mota mota in a broader way that you're trying to forecast the company's cash flows. Cash flows are your bread and butter, right? Cash flow is your, I would say, the basic that you need to have, right, to forecast a company's financial cash flows or to ascertain a company's valuation. If the company is not having cash flows, you cannot forecast the company's future. So we'll be understanding something as a DCF analysis, right? We'll talk about it. ठीक है? So वो हमको समझना है. So before that, before I start with anything else, I'll just share a brief, just a second, refinement on like one of the concepts that we tried to understand in the previous session. It might take just 5 to 10 minutes, and then we can deep dive on the financial modeling exercise. If you recall, we discussed a lot about the price to earning multiple and the price earning growth multiple. In case you recall, everybody, right? We try to understand the difference between the price to earning and price earning growth, right? Why the price earning growth is much more important versus the price to earning multiple, and where the price to earning multiple can mislead you, right? In many of the scenarios, the price to earning multiple can mislead you. It is not a good metric to value a company ideally, right? We discussed that, but many of the financial analysts or the valuation experts have been using the price to earning multiple only. It can fool you very easily, correct? Because the multiple, like I would say, one of the reasons that we discussed was the price to earning multiple is derived from the company's past earnings, trailing earnings, one absolute number. But price earning growth has a compounded CAGR of those earnings in the past 2 years, 3 years, 4 years, 5 years, for example. The second reason that we tried to understand was out of the other reasons that we studied was this number is derived from earnings. Like both of these are derived from the company's EPS. Earnings, EPS is a proxy for the company's bottom line, the profit after tax. But we are much more concerned about the company making cash flows because profit can be volatile, profit can be manipulative. And that we tried to understand in the previous session via like two examples, right? Two hospital companies we tried to understand, Healthcare Global and Shalby, if you remember. One company was having a higher profit, like one company was having a fluctuating profit, but the fluctuating company profit had positive cash flows, but the other company had negative cash flows. And we try to understand something as a cash return upon cash invested. Cash return on cash invested. So nahi the in the previous session, those were not able to attend. Please watch the previous recording. It is the most recent recording on the Google Drive. Because everything is judged on cash flows. Cash flow is a bread and butter. Profit can be manipulative, profit can mislead you, but cash flows will not. You cannot manipulate cash flows. It is actual that you have received inflows and outflows. Profit can be manipulative. Now, here I do not mean that every company manipulates the profits. If they do, they come under the radar of SEBI. And all these kinds of things are being done with that company. But a few of the companies tend to do it. And those companies, like, they tend to land into trouble at a point of time. So सारी कंपनीज ऐसा नहीं करती हैं, but you need to be careful. So one thing we need to understand is from a formula perspective, we try to understand price by EPS. Okay, I'm talking about the price to earning multiple. And this was a trailing 12-month EPS. The current market price divided by the trailing 12-month EPS. Yes or no? Formula याद है सबको?
Yes, sir.
बाकी लोग? How about others? Price
Yes, sir.
remember? Everybody, please be on cameras and please respond. Yes or no?
Yes,
Yes,
sir.
sir.
पक्का? Yeah, Pranati, you remember price to earning का formula? Am I right? ये formula ठीक है जो मैंने लिखा है? अभी मत बोलना सर आपने लिखा है तो सही होगा। इज द फॉर्मूला राइट? प्राइस बाय द ट्रेलिंग 12 month EPS। हाँ या ना? And the whole class is saying yes. Hmm? Like were you present in this session? In valuation session, like where we try to understand PE, PEG? Were you there? आप थे? अगर नहीं थे तो रिकॉर्डिंग देख लेना। मतलब आई एम नॉट ट्राइंग टू जस्ट लाइक पुश यू ऑन वन साइड, बट जो भी नहीं थे प्लीज वॉच द रिकॉर्डिंग्स। ठीक है? तो एक बार एवरीबडी जो उन सेशंस में नहीं थे, प्लीज वॉच द रिकॉर्डिंग्स ऑन द ड्राइव। इफ यू हैव एनी क्वेश्चंस आस्क मी बैक। ठीक है? आई कैन जस्ट हेल्प यू पुश यू टू बी बेटर, everybody, like all the people who are not on cameras also. But obviously I can't force like everybody, right? I can just guide you and push you all कि भाई कर लो कर लो कर लो, and recordings देख लो, questions हैं तो पूछ लो, because I expect everybody to say a yes if we have done something in the class and you have been attentive. So 28 people are there and just 7-10 people have switched on their cameras. How about the rest? Guys, remaining 20 hours बहुत इंपॉर्टेंट है। अगर आपके फर्स्ट 20 hours have been, if you were attending the first 20 hours and you have a fair understanding, at least like 50-60% of it, the remaining 20 hours is very simple for you. I'm telling you. थोड़ा बहुत you learn something new in case of assumptions and all, but at least creation of the financial model and forecasting will be very simple for you. कुछ नहीं है उसमें। I've shared a certain files also with you on WhatsApp. So those are all the financial modeling files. ठीक है, we'll do via those only. And in that financial modeling, I've shared one template also, right? In the financial modeling simplified Excel file. So you have you have like two tabs there, one via the free cash flow to equity and one via the FCFF. So that template you can use anytime for the creation of the financial model for any company. We'll be using that template here also. You need not create the template manually. Just put in the numbers, everything will be forecasted. And that is why financial modeling will not take much of the time because the template is there already. You just have to put in numbers and you not spend much time to teach you how to create that template. And in companies also, you never create a template. You get the template in hand. ठीक है? So many of, I would say at least many of your 50 to 60% of the companies like will be using this template. All Indian companies like will be using this template. At least many of the foreign companies also tend to use, but some of the companies have their own servers. Like for example, if we talk about companies like JP Morgan or a Morgan Stanley or a Goldman Sachs for the global investment banks, they tend to create the financial models on their own internal softwares, right? And that is something which is like much more easier than this. वहाँ पे the manual work is almost zero. ठीक है? So many of the things you tend to learn when you land into a corporate, like what the company has their own softwares, internal softwares रहते हैं, right? Those softwares are I mean to say not publicly available that you can practice them or exercise them, right? But at least you should know how to create a model because many of the times this Excel file is used. So coming back to our topic, तो यहाँ पे we used to take into account the trailing 12 month EPS in denominator, the past 12 month का earnings. ठीक है? अब this is your trailing P, correct? The trailing price to earning multiple. Now, what do I mean by trailing? The word trailing means past 12 months. पिछला EPS के basis पे और historical EPS के basis पे I've tried to calculate the price to earning multiple. Something we calculate in the field of financial modeling when we are trying to forecast or when we are done with the financial modeling report as a forward P. You might have heard this terminology, forward P. The company's forward P is this. The index forward P is this. You might not have calculated, but I'm assuming might have heard. Those who try to track the markets, those who read multiple research reports, CNBC वगैरह पे, they tend to say the forward P of this company is this. The forward P of the Indian market is 18 times. The forward P of Nifty 50 is 18 times. Based upon that, the company is undervalued. So what do we mean by the forward P? The forward P is basically telling you that in future, now this forward P can be calculated based upon like 1 year forward P or 2 year forward P. Max to max they calculate based upon 2 year forward P. But logically the 2 year forward PE it doesn't make much sense. 1 year forward P is fine. Because even a toppest to toppest financial analyst or portfolio expert cannot know at what valuation multiple the market or company will trade in the next 2 years. If we are in 2026, I can just make some kind of assumptions, but I cannot be sure at what multiple the Indian markets will trade in 2028. My 2027 estimations might be a bit closer, but the probability that the 2028 estimations will be precise is low, right? Is low. Because 2 साल बाद क्या होने वाला है? Even last year, like many of the fund managers predicted good earning growth for this year because no one predicted the US-Iran war. But now the estimations have been cut down. The valuations are down. The estimations are down, right, in terms of earnings. Last year, we as analysts were trying to forecast like 15-16% earning growth for Nifty 50. That is Nifty 50 में जितनी भी companies हैं, top 50 market cap companies, they shall be making 15-16% earning growth at the index level combined for all the companies. But now the estimations have been cut down to 8-9% because of this war. So there can be certain kind of macro issues which can impact the earnings and valuation forecasts. So if we can be wrong in terms of 1 year forecast, then we can definitely be wrong in terms of 2 year forecasts, right? So in forward P, what we are doing, the formula remains the same in terms of numerator. It's a current market price. And you divide this by the forward EPS, forward EPS. So for example, if I want to calculate a 1 year forward PE, in 2026, I'm setting as of now, what shall be the 1 year forward PE for the market or a specific stock or the index in next 1 year? Now, this is basically impacted by if my earning growth is bound to rise. If my estimations believe, if I believe the earning growth will rise in future. So this year has been maybe a volatile year, right, because of this war and all these kind of situations. But I believe in the next year, the situation might be seemingly okay, right? Or fairly decent. So in that case, I can expect कि war नहीं होगा, the tariff issues might be resorted, the earning growth might come back, right? If all these macro issues are not there, these micro issues are not there, the company specific issues are not there, and the economy is running fairly stable, then I might expect that in FY27, right? Or in FY28 per se, or next year per se, the earning growth will be good. And if my earning growth will be good, it means my forward EPS will be good. And due to that, my forward P will come down because simple maths, my denominator will be a higher number. And due to that, my forward price to earning multiple will come down. I'll come to that key how to calculate this, right? So basically what happens, for example, if as of now, a particular stock is trading at 20 times price to earning multiple or 30 times price to earning multiple, for example, if I believe the stock will be having a higher earning growth next year, then due to that, shouldn't the forward price to earning multiple come down to below 20? If current is 20 and future may the earning growth will rise, shouldn't my 1 year forward multiple, price to earning multiple come down to below 20? 19, 18, 15, कुछ तो आएगा. Up now the situation is
Sir.
how to calculate the forward EPS. One way is to go manually via the financial modeling exercise. That when we try to forecast the company's profit and cash flows, we can calculate this number practically. I'll tell you how. ठीक है जब वहां तक पहुंचेंगे. One way is, or the most simplistic way is which you guys have luckily access to, the Bloomberg terminal. So what is basically happening in a Bloomberg terminal is, see, if I work currently at Motilal Oswal, I'll be estimating कि यार Nifty 50 or Nifty 500 per se, the earning growth should grow at some 10-12% odd in next year. ठीक है? So that's my estimation based upon my financial model. I might have used some kind of assumptions or inputs, ingredients to calculate those earnings. Right? Then a person working at HDFC Asset Management, some different company, he might say यार 11-12% तो नहीं होगा, it might be 13-14%, right? Because that person has different assumptions, inputs. Because my financial model, it won't be just like 100% same of that person. What financial model I will create and what financial model like Bharat or Satya will create, right? The numbers might be different. And that is why you might have heard people on CNBC or a Z Business or an ET Money, if you track, like which I've told you from the very first session, different analysts have different estimations on a particular stock. That this stock will rise by 10% in next 1 year. We expect the forward P to be 25. We expect the forward earning growth to be 26 by some other analyst. We expect the Nifty 50's 1 year forward earnings to be 10%. Some other person is coming from some other AMC saying that we expect it to be 13%. It is based upon the different assumptions they tend to make. Your financial model might be different from mine because of my different assumptions. You are not wrong. If my number is different and your number is different, that doesn't mean that you are wrong. You will only be wrong when you do not have a rationale for those assumptions that you have made. Copy paste करोगे तो गलत हो. Rational है, then you are right. Nobody is right or wrong in the financial modeling. Everything is an assumption. Everything is based upon assumption. If I believe that the 1 year forward PE of a company, अगर आज का 25 है and 1 year forward shall be 20, it might happen that 1 year forward, when I reach next year, that 1 year forward, that becomes my present. Correct? If as of now, my 1 year forward multiple is 20. After 1 year, when I reach that time, my forward converges to current, then I should stand at 20. If I am correct, right? If I am the best analyst in the world, right, then I should be correct. After 1 year, that multiple is not 20, it becomes 30. I might be wrong. And 99.99 people are wrong. Many people last year predicted like better earning growth, but no one could predict this war. Correct? हो सकता है 30 पे आ जाए. And even 30 can be a cheap multiple. It might happen that the price has risen a lot, but the earnings have also risen in conjunction with price. That the price also rose and the earnings also rose. What I was expecting is the price will remain same because my forward price to earning multiple का formula क्या है? The current market price. What's the formula for my 1 year forward multiple? It's the current market price, no? Because I'm still assuming कि in the next 1 year my price will remain the same, but my earnings will rise. Correct? My price will remain the same, but my earnings will rise, and due to that, the 1 year forward multiple will compress or shall become small. Correct? But isn't am I wrong? Price will definitely change, ना? ऐसा थोड़ा ना आज price 100 है तो next year the price will be 100. That's again the biggest limitation of the valuation multiples. In valuation multiples, as I told you also previously, you are just pricing a company based upon some other company's price. You are pricing your company. You're not valuing a company. You can only value a company based upon DCF model, discounted cash flow model. Earning के basis पे whatever valuation that you are doing in the market is all about pricing. Pricing is different from valuation. Pricing is different from valuation, right? You can price anything, but you cannot value everything. Price is what you pay and value is what you get. As someone has told this definition, Warren Buffett, Ashwin Damodaram, all these people talk about this, right? You have paid the college fee, or like you have gone to a restaurant outside, like in Hyderabad. You pay for, like for example, a veg thali, like 100 rupees. You pay for that. You've paid the price, but you do not know, like till the point of time you consume it, that was it worth it? Right? Was it worth that 100 rupees, or it should be just 50 or 40 rupees? बिल्कुल बेकार खाना था, right? So price is what you pay and value is what you get. So aren't the valuation multiples misleading you? Obviously. But still the market tends to use it and you will have to use it as well because you will be a part of this industry. When I use it. Correct? But the rationale you should know कि what is happening. You should can't just go like blindly कि P है तो P ही सब कुछ है. P के basis पे मैं I will become the next Warren Buffett. Warren Buffett has become him because he has valued all the companies based upon DCF model. Or the top like 3 4 bets that he has. He has Apple, right? He has Bank of America, he has Chevron, he has some shares of Coca-Cola, right? Bank of America, Apple नहीं है, sorry, like Bank of America है उनके पास, right? And American Express है. So all these, he has valued these companies based upon the cash flows 30 40 years back and not the price to earning multiple. So it takes time to find good companies. It can be high growth companies, it can be value picks, but it takes time. ठीक है, तो या तो मैं ये करूं, अब मैं इसमें आ रहा था कि फॉरवर्ड ईपीएस आप कैसे निकालोगे. एज आई टोल्ड यू दैट माय अर्निंग एस्टिमेशन वर्किंग एट मोतीलाल माइट बी डिफरेंट, राइट. सम अदर पर्सन वर्किंग एट सम एचडीएफसी एएमसी और निप्पॉन और पराग पारिक might come with some other number. A person working at JP Morgan, Morgan Stanley, Goldman Sachs, HSBC might come with some other number. So how should I calculate the forward EPS? My Motilal's forward EPS might be different. Nippon's forward EPS might be different. One thing that the Bloomberg terminal does for you, and Bloomberg terminal is ideally meant for investors. Okay, the major that why the Bloomberg terminal came into account, it wasn't meant for the financial analyst or the people like who work in these companies. The major reason that why the Bloomberg terminal came up, it was meant for those investors who cannot access the information from different sources. But now you can access the information from different sources. You have like multiple websites, Money Control, investing.com, Market Screener, as we like learned in the previous session. Right? Chat GPT is there. Claude आ गया अब तो like सब कुछ और better दे रहा है वो. Right? So Bloomberg was basically meant for the investors who can access such data, who can get all these numbers. But now since like everything is available, it has become a tool for the financial analysts because even the subscription fee is also like 40-50 lakhs per year. Right? The normal investor like won't be able to pay that amount. So, Abhi, the thing is, Bloomberg gives you a consensus estimate. So, what I am predicting in terms of forward earnings, what Nippon is predicting, what JP Morgan is predicting, it will try to have a consensus of all these earning growth. It will take the data from all the AMCs, correct? It will compile all this data and give you an average of all the consensus estimates. And it will build like one number out of all the consensus estimates from pan India companies who are estimating this particular company. Different AMCs का consensus estimates the Bloomberg terminal will take, and it will quote one number, 15%, 10%, 9%. Simply that number can be plugged in here in denominator. So now you need not work on the calculation of the forward EPS number also. And all the companies tend to do it. Once you join that company, they will open the Bloomberg terminal, like they will tell you कि यहाँ से निकलता है data, it's fine to do that. Then you have a PEG, the price earning growth. इसमें we talked about the price to earning in the numerator divided by the EPS का growth rate. Past 5 years में कितना grow हुआ है. Again, the PEG can be calculated based upon the forward PEG. It's like a forward PE, you have a forward PEG. Right? The numerator, it tends to remain the same. In numerator, you'll use the current PE only. You won't be using a forward PE. Okay, for everybody, many of the students tend to get confused in a forward price to earning growth multiple. Should we use a forward PE in the numerator? No. The numerator multiple will only be a current trailing multiple. The denominator multiple tends to change. In every forward valuation multiple, only the denominator is a forward looking multiple. You can have a forward price to book, you can have a forward EV to EBITDA. The numerator remains always current and trailing, just denominator changes. So यहाँ पे what I will do, by what rate I'm expecting my earnings to grow in next 2 years. If in 2026 my earning is 100, by 2028 I expect it to become 150, then what has been the percentage increase in growth rate? Again, simply that number I can take up here. And again, this number I can get from Bloomberg terminal. Consensus estimate by all the M's, by what percentage I'm expecting the next 2 years earnings to grow. By what percentage Motilal is expecting the next 2 years earnings to grow. By what percentage HDFC, AMC or JP Morgan is expecting the next 2 years earnings to grow. Bloomberg will take a consensus estimate, plug in those numbers, compile and give you an average consensus growth rate. सबका number compile करके, right? Because like Nippon can be wrong, JP Morgan can also be wrong, right? Motilal can also be wrong. So it's better to take an average consensus